Okay, so let's say that you don't have $3,000 to invest right now. What is a good alternative? An ETF. If you want to still get into investing, you have the ability to do that by investing in ETFs. ETFs are basically like an index fund. Most of them have like a sister index fund that you can match up to. They do have different ticker symbols, and I'll go over that in just a second. But basically, it mimics the index funds. So if you like a particular index fund, let's say you are in Vanguard and you like the S&P 500 index fund, you could get into VOO, which is the ticker symbol for the ETF that matches up to the 500 index fund at Vanguard. So let me go over some of the differences between an index fund and an ETF. ETF, all it stands for is exchange traded fund. Okay, so it is something that is traded on the stock exchange, which could be to your benefit if you wanted to trade that particular ETF in and out of the market, if you want it to be a little bit more liquid. Okay, so, and I'm going to say this for this course, I don't want you doing that. I mean, the goal of this course is for you to be getting into investing rather than trading. And so I would love for you to set yourself up with this practice of continually purchasing either an ETF and adding to it, or getting into an index fund and setting up your monthly um, allocation, which we're going to go over in very soon in a video. I want you to be adding to your balance each month. And I want you to be practicing that so that you can take advantage of the compounding effect that we went over earlier in the course. So once you get used to investing and you understand it and you're able to really get and understand what it means to hold money and to increase money, to let your money grow. Once you've accomplished that, then I would give you permission to go ahead and start another account where you can trade. Okay, so I would think of those as two different things completely. I want you to think of investing as a long-term thing that you're going to be doing. And trading is more for your benefit, really, to like see if you can get improvement in your the growth for yourself. Okay, so with ETFs, you do have the ability to trade them daily. So you can get in and you can get out, when you want to. So that is a benefit to them. They're a little bit more liquid. Can also be a downfall if you're prone to trading in and out and you think you're going to beat the market. So I personally like index funds over ETFs. Index funds sometimes will have a lower expense ratio. There are some tax benefits if you do put your index funds into certain types of accounts, like a Roth or traditional IRA at your brokerage firm. And in some cases, you're able to trade ETFs and invest them into those accounts in the same way, depending on like the brokerage firm and what they have available to you. ETFs you can purchase through any brokerage company, usually. So if you have like Robinhood or something like that as an app on your phone, you can get into those ETFs. Now, in the course, I've provided you with a short list of some really popular ETFs. And then there's a link at the very bottom where you can go see a more complete list of some of the most popular exchange traded funds. And those you can pretty much scroll through and look and see like what the expense ratio is, what how much they had made over the year. So you can kind of compare and get an idea and maybe feel out which one you're drawn to. You'll see in that list, many of the most popularly traded ones are Vanguard funds, and there are sister funds like index funds that match up to those ETFs. So you'll see a bunch of those in the list. So if you do get drawn to one of the index funds at Vanguard, but you see that it has like a $3,000 minimum or a $5,000 minimum, and you just don't have that yet, you can get into the ETF instead. Usually for like $1, you can get the ETF. So, I would say don't delay. Allow yourself to go ahead and purchase, whether it be the ETF or the index fund that you're most drawn to. And then just keep adding to that fund. Some people do also invest in the ETFs to start. And then once they have enough built up, they will go ahead and get into the index funds. So there's a lot of different scenarios here, for you to work with. Now, we're going to get a little bit into how to automate. And this is really the best part of the course because this is where we start helping you set things up to be more passive. Okay, so I can't wait for you to get into the next few videos.